Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Midweek Takeaway. We're delighted to be joined by Leon Coetzer, CEO of Jubilee Metals. Welcome back to the podcast, Leon.
Thank you, Phil. Thank you for the opportunity.
Absolutely, yeah. So obviously we saw the recent news that the company's reported a 51% surge in half-year revenue, reaching $141.5 million, primarily driven by record chrome production in South Africa. However, the company faced challenges in Zambia, with power outages contributing to a significant drop in gross profit to $0.3 million. Despite these hurdles, Jubilee remains on track to achieve its full-year production guidance from chrome concentrates and PGMs. Please, can you add some colour to these latest financials, Leon?
Thank you, Phil. Yeah, as you said in the beginning, South Africa has had a stellar operational performance, breaking all our previous records, well ahead of guidance on its chrome production and its PGM ounces slap bang on guidance. Of course, the impact of that chrome was a bit muted in the financial numbers when you have a period where chrome prices pulled back nearly 43% over that period. But the good part is we've invested that capital, the plants are running, we've shown we can make that operation, and in this period, chrome has recovered by nearly 40% again. So it's a great period to actually reflect the value of that investment coming through of South Africa. So we're looking forward to this period's results out of South Africa. You're quite right. In Zambia, we've faced several challenges, as we told the market, from power outages at a time when we had fully capitalized our Roan facility and we were celebrating its throughput and finally achieving what we had set out to do, only for it to come crashing down and stopping because our equipment was being damaged from the stops and starts of that facility. And we took the decision to bring it back into operation during the current period on better material to try and make up for some of that time lost. Frustration in Zambia, but at the same time, exceptional that the team was able to respond to that challenges. We have new power agreements that's stable in Zambia. We have new ore supply agreements that comes in at higher grade through Zambia. So we positioned particularly well in Zambia now to finally benefit from that investment. So we have two halves in the company, a company that's been fully capitalized in South Africa and very little capital remaining for it in the coming year, performing, and at the time when we have chrome prices appreciating and slight appreciation in PGM basket prices. And then copper ready for the off at a time when the copper prices has finally reacted to the market shortcomings.
Yeah, absolutely. So despite those record chrome revenues, as we just alluded to, the EBITDA slipped, I noticed, in the RNS. And is this some sort of, is it a short-term margin squeeze that you factored that in?
Oh, very much so. So if you look at the main reason there is coming from your chrome side, your chrome revenue nearly up 50-60% in chrome revenue, but your actual margin in chrome pulled back, aligning with the pullback back in the chrome prices. So that reacts very, very sharply. We are very exposed to that chrome price because roughly about half of our chrome production is market facing. The other half is on a fixed term contract. The fixed term contracts buffer you from chrome fluctuating prices, while the market facing contracts take full exposure to the market. So it's that side that now looks to benefit from the current appreciation that's happened in the chrome price, again up by nearly 40% since the December prices in chrome. So that'll naturally correct itself on that. And as you can see, we've always guided that our margin will be on the low side at 10%, on the high side up to 23% margins coming through on chrome. So that's what you can expect chrome to start delivering in the current period.
Yeah, and I noticed that you've made a kind of critical shift to the high grade copper feed at Roan as a way to kind of restore profitability in Zambia. When can that expect sustained results from that?
Yeah, absolutely. So our decision was that where Roan was a plant built to process waste and tailings, and that's what it was commissioned on. Because of all this time lost on that operation, the decision was taken to move it on to high-grade material, which there is quite a bit available in the area, in fact, quite a lot available in the area, and it needs the kind of Roan tech to recover that copper. So we've moved on to that material. And what we're doing is very systematically increasing the component of that material that makes up the Roan feed to have reached a point now where basically Roan is running on that exclusively. And as we told the market, we'll let Roan run for about 6 weeks, which takes you to middle end of April on this material, and then we'll give the guidance, because it has a dramatic impact on your copper guidance. This material, it's coming at well above double the grade of copper that we used to operate Roan at, and the Roan plant has now been adjusted to run on that material exclusively going forward, at least for the next year. As we told the market, we would expect to stay on this high grade material to make up for that lost time.
Yeah, absolutely. So obviously, as you just said, chrome price is recovering, and now you've got the power secured in Zambia. Do you feel like Jubilee is now positioned for a potential breakout second half financial year 2025?
Well, I was actually hoping, and I had the statement last year in November, we were absolutely poised for the breakout before the power crisis hit. But yeah, absolutely. If you look at the foundation that's been set in South Africa, capitalized, making chrome tons well beyond our guidance, maintaining a margin even when chrome dropped to its extreme low prices last year, recovered from those prices. South Africa perfectly poised to benefit and have its breakout here. Copper, absolutely. We've got power sorted. We have a plant and a refinery operating, and we have the right feed into that plant to maximize the copper return in Roan at the moment. So yes, finally, with what's put in front of us, we are ready to experience that copper upswing.
Yes, Leon, we've been here before. It must be very frustrating that nature has intervened in the last 6 months to make it much more difficult in Zambia.
It has, I agree. It's been extremely frustrating. I suppose the positive that's come out of it is every reaction that we had to those challenges resulted in a implementation of a contract or implementation of a process that was actually better than what was there before. And that's the positive one has to take out, is that our power agreements are better than what they were before the crisis. Roan is on better material than what it was before. Roan was even adjusted to be able to run now exclusively on run of mine, while proven its capability to run on waste. So yes, challenging, frustration, absolutely, but came out the other side stronger.
Okay, in terms of Rowan, obviously we're now in a situation where you're going to be running this run of mine, this new ore through the processing. How much more profitable is this than what you were going to do? So in other words, how quickly is this going to catch up? If you do this for a year, having missed effectively the last 6 months to 9 months of production, how quickly is it going to catch it up?
Yeah, exactly. I mean, as one can imagine, because for the same amount of tonnage you're processing, you're putting more than double the amount of copper units through the plant. So it is significantly more profitable to run on this higher grade material through the facilities. It's better, it's easier for the refinery as well. And therefore you can expect that we catch up very rapidly on the time that is lost. All that detail is what we will bring out to the market in very clear numbers towards the end of April, as we actually base it on the actual performance delivered by Roan and Sable on this material, rather than our expected performance on this material. But far to say, it's if you're running at double the grade coming through your facility, one can expect your profit margin to sharply increase.
You're going to be selling a concentrate from Roan then. So what percentage of LME are you likely to get for that concentrate?
I know the majority of material coming out of Roan on this material is actually concentrate that's refined at Sable. More than 80% of the material is refined to cathode from Roan's product. So roughly about 15% only is produced into concentrate that's sold as a concentrate product. So by far the majority is sold at LME through cathode.
So you've got a circular economy there. You're bringing in the stuff, you're producing the concentrate, and the concentrate's getting shipped then to the other plant, and therefore then producing cathode.
Oh, absolutely, yes. So the concentrate made at remember, Roan makes two products, makes two types of concentrate. By far the majority is trucked down to Sable and refined into cathode, while the small minority, as you said, roughly about 15% of what you make is made into a copper insoluble concentrate, which means it cannot be dissolved in acid to be plated as cathode. That is sold as concentrate in the market.
So at Sable, the concentrate is effectively just put into those plate areas. It doesn't have to be processed again, or
so the concentrate the concentrate is leached into acid, and the copper is then plated out as cathode at Sable.
Okay, so how's it going then at Sable and the mining that you have got around Sable?
Yeah, so as
Munkoyo,
operations Around Sable, we've got Munkoyo, which is the first one that we acquired. That pit opened up and drill work undertaken to confirm that copper is there. And at the moment, the drilling work is being expanded to define the resource better and also to expand that open pit even larger. At the moment, that pit roughly maintains about 75,000 tons mined a month, of which between 65 to 70,000 tons is stockpiled on site into that stockpile that now already reaches beyond 1 million tons on surface, and the rest is trucked directly to Sable for refining. Project G, the second mining project, is undergoing its drilling program for its definition of its resource and its design of its pit. And once that pit design is completed, it then steps up into the similar mining rates as Munkoyo.
So how quickly do you think Sable will reach its capacity with these two things coming?
As we said before, Sable should be at full capacity by June, July, running at its full capacity as a refinery.
And that's producing, what, 16,000 tons of copper a year?
No, that's before we put the second tank house down. The second tank house is only later in this year. So it'll be running between 8 to 9,000 tons of copper per year extracted.
Okay. And then the extra capital is then going to be to produce another tank house to produce the copper.
Oh, very much so. So Sable has that flexibility. We add another tank house to Sable, and as we add that second tank house, it doubles up the plating capacity and therefore doubles up your cathode capacity of that refinery. It's part of the recapitalization of that refinery that's planned for the 2026 financial year, kicking off in July.
Very good.
I want to ask about the waste rock copper project, because we had the deal you started talking about it in December 2023. And now it feels like it's taken a little bit longer than expected. So what's the plan there at the moment?
Yeah, very much so. So we have till roughly middle into May to complete all the test work that we've undertaken. And the test work results have come out quite supportive of the project. And what it does show is that with the results at hand, copper prices where they are, our test programs and our pilot facilities, is that we probably could have done a much, much better deal than what we had done at the time. And we as a group are looking at that. We've received several approaches from companies who are very eager to look at forming some kind of partnership with us on that project. So in a very fortunate position where we have a very high, large, exceptional resource sitting on surface. As we said previously, when we say large, it's 260 million odd tons of it sitting there on surface. And that's attracted tremendous interest from many, many copper companies to come and look at how do they partner with us on a project that can offer scale and can offer scale at such a low capitalization number.
What specifically have you done with the waste rock project? What kind of data have you got to show companies that are looking at it?
Again, I can only share here what's in the public domain. I can't be sharing here stuff that's not in the public domain. So, as we said before, we've undertaken several sampling campaigns. We've run several laboratory and large pilot scale trials on this material to complete the definition and design study of the processing facilities, which are modular plants that are rolled out onto that material. So all that information is available on that asset at the moment, and it's that information that's attracting the interest from several companies, because the processing is not novel. The processing is demonstrated at both Sable and at Roan, because Roan holds one of these modules already. So people can actually see how it's been de-risked, the project, from where we were in December 2023, where it was a concept, where today it's been sampled, drilled, tested, pilot runs, and in fact have a module of similar design already in operation at Roan.
Just in Zambia more widely, the crunch point seems to be energy, because obviously the country runs on hydroelectric. Obviously we're coming out of the rainy season now, but are you unconcerned about power demands from Sable and Roan now? Or do you think you're going to have to do more to make sure that we've got enough energy?
Yeah, I mean, at the moment where we are sufficiently supplied by electricity in Zambia. You are correct. It's a very hydropower reliant power supply from Zambia. And therefore, we, as many other companies, are looking to supplement what we've got with through partnerships on further renewable energy sources. Solar is becoming a very popular power go-to in Zambia at the moment, with a number of projects being launched in Zambia on solar, which to look to alleviate, especially during the daytime, that power draw on the network. And we certainly won't be sitting back and not be looking at those style and type of partnership projects as well. It offers a lot of cheaper power as a supplement power supply into the agreements. And because our agreement today is a distributed power supply agreement, not reliant on any one power supplier or power generator, these style of solar style projects slot very nicely into such a distributed network supply agreement.
And then in terms of the last time we spoke was a few months ago, we were talking about when you're acquiring assets, how to balance, the need to acquire assets for future production versus generating profits now. How are you balancing that at the moment, given the share price where it is?
Yeah, absolutely. I mean, we're looking very carefully at our capital spend to make sure our capital spend returns value sooner on the type of projects. So it impacts the rating of your projects you pursue. At the moment, for us, our biggest focus by far is ensuring the great assets we hold at the moment actually perform to expectation, that we actually have Roan running and performing to its expectation. It's a big component of our copper production. Equally, since we've got such a quality investment in Munkoyo, that Munkoyo completes its expansion and delivers the copper to expectation because it's capital already spent in the acquisition of that. And so those kind of projects certainly enjoy a priority at the moment in the group.
And then finally from me, in South Africa, in terms of growth, are you almost finished growing? I guess would be the question.
Sure.
Do you expect more capital expenditure, or have you got to the point now where you've done what you set out to do and it's time to just reap the rewards?
Yeah, certainly in South Africa, our main focus right now is reap the rewards, as you say. And we've gone through a heavy capitalization phase of expanding this company from 40,000 to touching 1.8 million tons of chrome and our PGM capacity as well. We would if our PGM capacity is under pressure because we produce so much chrome concentrate and therefore we have so much material available for PGM recovery. And for that, we'd rather look at joint venturing with existing capacity rather than investing into new capacity. So our capitalization in South Africa has tapered off sharply in the group. And we certainly don't look to, in the immediate term, expand further. That's something that we'd consider at a later stage.
Excellent. Okay, perfect. Thank you.
Oh, thank you.
From the waste project point of view, you're saying it's 260 million tons of waste product. What do we think is the potential, percentage of copper in all of that? Are we saying it's below 1%? Is it above 1%? What do we think?
So what we've informed the market today, Kevin, is that it's a typical waste rock from a mining. So you're going to have, it's not a homogeneous rock. It doesn't come all from the same mine or over the same period. It comes from, it's been built over between 60 years of mining, has built this tremendously large rock dump. So it will range from all kinds of grades. And as we told the market before, you'll have areas in excess of 2% copper, but equally you'll have areas that drops down to below 0.3% copper in that dump. We have not disclosed the full profile of that copper dump because again it's too large. You won't imagine that can't imagine you're going to mine or process 260 million tons over a 15-year period. It's simply too large. You have what such a large dump brings you is the luxury of being able to choose because you've got the luxury of size to be very selective on what you process. And that's what the surface dump brings you, unlike a mine. You have to mine through the area that you have developed. With the surface stockpile, we can be very selective, not only of where we collect the material, but also what material in that area do we actually collect. That's the benefit and advantage of having such a large rock dump of material on surface because the cost has been incurred. It's on surface already.
And I've actually driven past it as well, haven't we?
Yeah.
We've driven it. It's massive. It's vast, isn't it, that site? It just goes on for kilometres.
Yeah, it does, yes. No, very much.
So what you're saying really is that, if you can identify, which I assume you already have, but you're not telling us, which is fine because it's not in the market, but you can be looking at between 1.5% and 2% copper in certain areas for the first few years. It's almost like an open pit because you can actually choose the right places.
Yeah, I mean, what we do as Jubilee, what do we do so much better than most, in fact, any other company I know, is how do you take something of low grade and very quickly and selectively select the grade within that material that you then apply your process to. It's what makes us different. It's what makes our chrome business so unique, that they are able to mine reefs people had thought were waste, and today it's classed as a reef. That's what ability defines us from any other competitor. And therefore, whether it's 0.3% or 1.5% the grade, it's how you take a 0.3% to above 1.5% by applying minimal cost to it before you start extracting the copper using expensive chemicals. That's what defines Jubilee. And that's why that dump, if its grade is 0.3 or 1.5, it's our ability to take that 0.3 to a 1% very rapidly before we apply chemistry to extract copper. And that's what makes it so profitable, these projects as well.
I know you can't apply tell us specifics and it's not in the market yet, but just broadly, do we think a new deal for the waste project is going to come within the next, say, 6 months? And will it be better terms than what we were talking about back in December 2023?
So, I mean, we definitely would pursue a better deal. Why? Because the knowledge we have today of this material compared to what we had back then is dramatically different. The amount of work we have done on that material to define its potential is dramatically different. And therefore, we are able to far more accurately speak of its processing, its capital, and its expected performance than what we could back in 2023 and 2024. And therefore, one would expect a better deal to recognize that better value that we've brought. Today, we have modules running that we had designed back then for this project. So the de-risking of this project has been significant, and therefore the deal should and must reflect that. On timeline, as we've concluded our processes, it will be silly to sit on a resource like this for too long, because there will be pressure, which is rightfully so, from the authorities to actually put to work this asset that can employ a lot of people very quickly. So one would expect that such a new deal would be pursued quite aggressively by our group, and to conclude it quite quickly to allow us to move forward on the implementation of that project. Okay, that's talking around the timeline, but being clear that we expect it to happen relatively quick.
Very good.
Our favorite word.
Yeah, and you've paid for all of this then, Jubilee, then. IRH have not put any money into this so far.
Yeah, all investment into this project has come from Jubilee. We have been the sole investor into this project, which gives us a lot of flexibility on deciding and designing a transaction with whom we choose to go forward with.
Okay, good luck. I think we discussed earlier that maybe come out and see you in the depths of winter there in South Africa and Zambia in maybe July, when your full year results will be out. And really, all things being equal, this is the starting gun that goes off that says, full production within a few weeks at Roan. You're going to have copper coming out of Sable. And as you said, the chrome price is going up. PGMs are creeping up. Will they continue to go up? We don't know. But even if they don't, you are going to be in a much better position when you announce the full year than you have at this time, because of all the problems that you've encountered.
No, absolutely, Kevin. I mean, we are positioned well. We have our plants ready and operating, fully capitalized. We have the right resources feeding them, and the market is playing ball with copper prices appreciating strongly, chrome appreciating strongly, and as you say, PGMs creeping up. It really is for us now to grab hold of and secure that opportunity.
Okay, well, on that note, we'll say Leon Coetzer, CEO of Jubilee Metals, thanks very much for appearing back on the podcast.
Thank you, Phil. Thanks, team.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.